Well, an upbeat day on the local market. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Well, Martin Lakos, it's the day after the night before. Any ripples on the market from the federal budget?
Look, it would appear the budget really is quite neutral for the stock market. There wasn't anything specific that was going to impact the market. I guess the implied negativity might have been to the retail sector, with household income being reduced probably the first time in 5 years, and that has got to impact discretionary spending over time. That being said, we've already seen retail stocks come off a lot over the last few months. And to give you an idea, Tiggy, we actually had the retail stocks up a bit. JB Hi-Fi up 23, David Jones up 11 and Myer up 1. So there's really nothing specific there. I think our market rallied today, up over 53 points on pretty good volume, about $6 billion of turnover, largely on the fact that we had much stronger markets in Europe, pretty solid numbers out of the US, and commodity prices rebounded also. So I think really that's where the focus of the market players were today.
OK, well, to the stocks, the building materials company Boral says it's trading in line with expectations. So why did investors push its share price up so much today?
Well, I think that to some extent the reason why it was pushed up was there had been an expectation that a cyclical stock such as Boral, particularly with a big US exposure where housing is so weak, would in fact might have come in with a negative guidance. And in fact it's got to be viewed actually pretty positively that it didn't. They certainly noted that they're getting some benefit from the Aussie dollar because they've got US dollar denominated debt, so their interest costs are dropping. They did note that residential housing in the US and Australia remains soft, but they also said that pricing is starting to improve, which is obviously good news for Boral.
Shopping centre giant Westfield also updated the market, didn't it?
Yeah, look, again, a bit of a surprise. Investors might have expected that Westfield might have reported soft numbers. Again, they've reiterated guidance and a couple of positive things out of the report. Firstly, they're lifting their development budget from a range of $750 million to $1 billion to $1.25 to $1.5 billion. Now, a lot of that is going to Australian centres, such as Chermside and the Lakes in Queensland, Tea Tree in South Australia. So that's good news. That is obviously a bit of confidence by Westfield management. They also are benefiting to some extent from the strength of the Aussie dollar. Again, largely their interest costs and US dollar denominated debt is starting to go down for them. And lastly, they are seeing some